Thank you so much for joining in, Mr. Chowdhary. To begin with, the freight wagon segment order book, that has seen pretty healthy growth. There's that large order as well that we'd spoken about. I just want to understand what the outlook is going forward. Where do you see wagon ordering headed? Is it going to grow at a higher pace than it is currently?
Yeah, good morning. Pleasure being with you. So yes, absolutely. I believe that the Indian Railway, the stated policy of the Honorable Prime Minister of the Government of India, is to reduce the overall logistics cost as a part of the GDP, and this can only be done by a paradigm, a kind of a shift from the high cost mode of transportation to the more cost effective mode of transportation, i.e. railways, waterways. And the whole Gati Shakti program of the government, the way the government has been spending on the railway infrastructure is a very clear signal that the railway market share is bound to grow. And I have always maintained that in the first 7 years of the government, the government has done a miraculous work on spending in terms of infrastructure creation on the railways. So basically, when they invest in the track, they invest in the signaling capacity, they invest in the locomotives. What they are doing is they are creating capacity. And in order to utilize that capacity, they need more wagons. So now the kind of the last end of the spectrum is coming in, which is requirement of more wagons and growing the traffic.
Okay, fair enough. So what is the outlook when it comes to the private wagon market over the next 2 to 3 years in terms of where the company is going to stand, your market share, and how you plan to scale?
So we have been leaders in the market for wagons. We of course would endeavor to maintain our leadership position. As far as the private wagon offtake is concerned, we've read in the news that the new approvals railways are not giving for new WIS wagons, but that really doesn't really make a difference because the existing applications or the existing approvals are so large that it would probably kind of sustain the next 2, 3, 4 years of take. So on the overall basis, now our company is at a level of about 700 wagons a month, give or take a little, and we intend to get to about 1,000 wagons a month over the next few months.
Right. Mr. Chaudhary, the passenger segment includes metro trains as well. What is the outlook there, and especially when it comes to new metros that you've been bidding for?
We are extremely excited about the passenger rail side of it, because on one side, we've created a capacity to make metro coaches where we are executing now the Pune Metro, then with CRRC, we are executing the Bangalore Metro, or we would start the execution of Bangalore Metro this year. We have bid on a number of other tenders. And it is again one of the stated policies of the government that there would be metros in every large and medium-sized cities. Metro also, incidentally, is very aspirational. So it is directly related. It is seen as a direct corollary of growth and prosperity, and it is necessity. Say that for the urban transport, with the congestion of the roads, with the pollution, with all of that, it is a necessity. So in a country like India, which is densely populated, metros are going to be there in the future for times to come. Having said that, so while we are very excited about the metro, I think the big other opportunity that we have is the Vande Bharat opportunity. So we are now basically setting up a parallel production facility within the same plant to produce both Vande Bharat and metro simultaneously. So we believe that on one side the long distance travel, that is Vande Bharat type of travel, is going to be there. On the other side, the metro business is definitely for urban transport systems is going to be a thing of the future for the country.
Oh yeah, absolutely, and what a great opportunity for you. But Mr. Chaudhary, the only thing is that this margins in this particular segment are low by about 3 to 3.5% kind of range. And please correct me if I'm wrong. Is there scope for the margins to be pushed higher at all?
Absolutely. You see, what the margins you see in our financials at this point of time is the startup margin. So we've really not stabilized. So we are now producing hardly about, if you see it on an average, maybe one train a month. So one train a month, our fixed cost remaining what it is, obviously the margins are impacted. Our targeted capacity is far, far, far higher than that. So we believe that the margins we've always maintained that our overall margin guidance is between 8 to 10% for both FTRS, which is freight rolling stock, and PRS, which is passenger rolling stock business. And we believe that that is something which is a pretty manageable or achievable for both our businesses once we, of course, reach a certain base volume.
Right, that's great. Tell me a little bit more about your Vande Bharat orders as well. What's the execution? What is the gestation period? And what kind of margins are you hoping to make there in specific?
Sure. So Vande Bharat is like I say it internally, my company, that it's a transformational opportunity that we have got, not only as a business, but also, becoming a part of the national growth. Vande Bharat is also a telltale sign of the new India, if I may say so, the modern India and the India of the future. So this is a contract that we've got along with BHEL for manufacturing, supply, and maintaining of 80 Vande Bharat trains. The total contract value would be about 24,000 crores. The first train has to be developed and manufactured and supplied in 2 years, and thereafter all the other trains would be within about 4.5 years thereafter, and then there is a 35-year maintenance of all these trains. We would be producing the base coach in Calcutta in our plant, and the final testing assembly would happen in the railways facility in ICF in Chennai.
And given the kind of visibility that you have on orders, do you have the capacity to fulfill these orders? And what's your capex target for the next 5 years?
So we had stated that about 2 years ago that our total capex for this entire plan is about 1,000 crores, out of which about 300 odd crores is already spent. We have decided not to put new capital allocation on the shipbuilding and bridges and defense business right now for the next couple of years, because we also have the wheels tender that we have won along with Ramakrishna Forgings. So with all of this, our capital allocation is really happening only in the railway space, and this is also kind of our strategy is reflective in the decision to change the name of our company into Titagarh Rail Systems, which is now in front of the shareholders for their approval. So we would be focusing on the capex, on the capital allocation only on the rail business, whether it's increasing the Vande Bharat capacity or setting up the new wheel set facility.
Okay, and are you looking to shift focus from wagons to maybe other segments and industries? What kind of revenue potential do you see from these businesses? If you could give us some sort of a timeline as well.
Sure. So the other big one which is there is the wheel set business, where we partnered with Ramakrishna Forging, and we've won this tender from the Indian Railways. This entails setting up a kind of a greenfield plant for manufacturing of wheels. And it's a very interesting model, because Indian Railways have always had problems in terms of availability of wheels. And, for the last 25 years that we've been in the wagon business, one of the questions that we've been faced, and we faced within ourselves also, is timely availability of wheels and wheel sets. And in a country like India, we didn't have adequate capacity, and we ended up importing them. So if you really look at this tender that has been floated and finalized by the railways, this is going to be a very important milestone for the railway industry in India, where 80,000 wheels for the next 20 years is going to be purchased by the railways But that gives us the base load to set up a new plant, which will not only cater to this tender, but cater to the other requirement within India and export requirements. So we partnered with a wonderful company, Ramakrishna Forgings. They are leaders in the space of forgings. And we have our expertise on the railway side. So it's a wonderful combination, both from the manufacturing expertise perspective and the market expertise perspective. And we'd be setting up this plant.
Right. Mr. Chaudhary, we've been reading notes on how you've been inviting brokerages to your factory visits, wondering when is ET Now's turn.
You're most welcome any day. It'll be a great honor and pleasure for us to have you there.
Okay, we will definitely take you up on that for sure. Great to speak with you today. Thank you so much for taking the time out.
Thank you very much.